Good morning and welcome. I am Myra Saltender, Chair and Non-Executive Director of Abacus Group. I will chair today's annual general meeting of Abacus Group security holders, which is being recorded. On behalf of the Board of Directors, it is my pleasure to welcome you to this meeting. This meeting has been convened in accordance with the Corporations Act. As it is past the appointed time of 11:38, and a quorum of security holders is present, I declare the meeting open. This meeting comprises the annual general meetings of the members of Abacus Group Holdings Limited and Abacus Group Projects Limited, in conjunction with the meetings of the members of Abacus Trust and Abacus Income Trust. I'm joined today by my fellow Abacus directors, our independent non-executive directors. Mark Evelyn, Chair of the Audit and Risk Committee and member of the People, Performance and Nomination Committee. Trent Alston, Chair of the People, Performance and Nomination Committee, member of the Audit and Risk, Sustainability and WHS Committees. Mingmin Shayan, Chair of the Sustainability and WHS Committee, and a member of the People, Performance and Nomination and Audit and Risk Committees. And Managing Director, Stephen Sewell. We are also joined today by members of the Abacus management team and the group's auditor, Jody Inglis from Ernst & Young. Before we move to the formal voting on the resolutions, Managing Director Stephen Sewell and I will share a concise update on the group's performance and strategic priorities. There will also be time for you to ask any questions in relation to the resolutions during the meeting, and any other general questions you may have at the end of the meeting. Abacus Group delivered solid performance in FY25, underpinned by disciplined execution and strategic focus. Abacus Group is a diversified commercial REIT comprising 16 commercial assets valued at $1.9 billion. The group delivered funds from operations of $82.7 million, up 1.7% on FY24, and a distribution of 8.5 cents per security, in line with guidance. The group reported a statutory profit of $26.9 million, reflecting a significant turnaround from FY24. The increase in statutory profit was driven by a higher share of profit from joint ventures, substantial reduction in fair value losses across the commercial portfolio compared to FY24, and strong leasing activity delivering higher rental income. Abacus Group's focused office and retail portfolio is well placed to drive income growth over the short to medium term, supported by our people with a strong team culture, deep market insight, and proven repositioning capability. Our strategic investments in assets located in key markets with clear pathways to sustainable income growth, and our active asset management capability to maximize value creation. Looking ahead, we remain committed to long-term sustainable outcomes through selective investments in real estate sectors aligned with our strategy, active investment, asset and development management, and enhanced customer engagement, brand awareness. Our ESG strategy integrates environmental performance, social impact, and governance excellence into operations. Details are outlined in the FY25 sustainability report, which sets clear targets and progressive metrics. Stephen will elaborate on our progress in this area shortly. But before I hand over to him, I'd like to thank our board and management team for their dedication during the last financial year. I would also like to thank our security holders for your continued support. We remain focused on delivering long-term value.
Thanks, Myra, and I'll add my welcome to those attending today. As Myra mentioned, the group has commercial assets valued at 1.9 billion, which comprises 14 office assets, predominantly A-grade buildings, 77% of the portfolio being A-grade buildings in prime locations, giving a diversification across geography, asset life cycle and tenant profile. We also have 2 retail assets, being our 50% interest in the Myer store in Melbourne and the single shopping centre up on the Gold Coast at Oasis. Additionally, the group maintains exposure to the self-storage sector by the 19.8% strategic stake that we own in Abacus Storage King. And this investment delivered $16.8 million in equity returns, as well as our management and development fees of $18.1 million in FY25. ASK is the largest asset on the group's balance sheet and our largest single source of income when combining both the equity and management fees earned. Looking at the commercial portfolio, as I said, it's predominantly office, and our portfolio performed very well in FY25 with year-end occupancy of 91.1%, like-for-like rent growth of 4.3%, which was underpinned by strong leasing activity. Those leasing deals had an average spread of 5.8% and rent reviews averaging just under 4%, 3.7%. The group's buildings, including the building that we're sitting in, are well-connected locations. They do attract a lot of customers, particularly small and medium-sized enterprise tenants, who also value the relative market value of the assets and the rent attributable of the properties. As a result, our tenancy profile remains well diversified with a high skew, nearly 60% to small and medium-sized enterprises. During FY25, we did surrender a number of leases, both at 99 Walker Street in North Sydney, as well as 324 Queen Street up in Brisbane. And these surrenders reflected tenant exits and gave us the opportunity for our proactive leasing teams to bring forward the reversion of those incomes. The portfolio in retail, predominantly Oasis, did deliver strong results as well. Like-for-like rental growth was positive and leasing spreads also positive, and I'll update those in a moment for the first quarter of FY26. Capital management. The group maintains a solid capital position with gearing at just over 34%, well within our target range. We do have acquisition capacity or balance sheet capacity of over $230 million, with an average debt cost, as you see, of 5.1% in the year. We have guided for that average debt cost with the lowering of interest rates to now be in FY26 4.5%, which does assume an average floating rate of 3.5%. The distribution was fully franked, 50% fully franked, which was up from 25% fully franked in the previous year. We're pleased to affirm guidance of 8.5 cents in FY26, with again 50% expected to be fully franked. And that would be a payout ratio in the range of 85 to 95% of FFO. We have transitioned the group over a number of years to a more annuity style model, prioritising income producing assets and disciplined capital allocation. We are focused and remain focused on divesting non-core assets, and these will continue to strengthen the balance sheet. We will look for, in 26 and beyond, we do remain focused on identifying opportunities wherever we can to drive our portfolio's long-term value for stakeholders. As Myra mentioned, the group has continued its progress in sustainability initiatives, with key highlights during the year being reductions in Scope 1 and 2 emissions, NABERS energy rating of just under of 4.7 stars, and a substantial improvement in waste diversion from landfill. Our sustainability strategy underpins our approach to people governance and embeds initiatives that build capability and foster inclusion. In the last year, we executed this through programs such as Respect at Work, Career Pathways, and an 83% employee engagement score, the engagement survey, which we had 100% participation. Clear evidence, we believe, of the progress we've made against our goals. We do continue to align our practices with external frameworks, and we're preparing for the Australian Sustainability Reporting Standards, which will apply for the group from July 2027. Turning to the latest quarter, ended 30 September, we've seen very positive, solid operating metrics across the office portfolio. Albeit on a smaller number of deals, leasing deals, 15 deals over 6,500 metres, the spreads have been 7.7% positive and 190 basis points higher than it was in FY25. Importantly, the gross incentive of these deals did decrease meaningfully in the period to 25%, down from 33% across FY25. And whilst it is a smaller sample size of deals, we do believe it's a positive development and early indication of improving conditions. The WALE for the portfolio was 3.4 years, broadly in line with FY25, and average occupancy reduced slightly, impacted by those surrender fees, a surrender of leases that I talked about. Excluding the impact of the surrenders, our occupancy would have been still at 91% at the end of the first quarter. During the first quarter, we completed over 1,500 square metres of retail leasing at particularly Oasis, which did lift the occupancy to 98.2%, and the WALE remains 5.6 years, up slightly on June 2025. Importantly, leasing spreads were 8.1% positive in the first quarter, particularly strong given the trading conditions that we're experiencing up at Broadbeach. Following payment of the FY25 final dividend, gearing increased marginally to 35.6%, again within our target range of up to 40%. With minimal debt expiring in the near term, we do believe our balance sheet is positioned the group well. As I said, we affirm our distribution of 8.5 subject to there being no further material deterioration in current business conditions. In closing, I'd like to add my thanks to the entire team for the hard work that's gone into the year and commitment, and the board for their ongoing guidance. I'd also like to take a moment to thank you, our security holders, for your continued commitment to the group, and I'll now hand back to Maira for the formal part of the meeting.
Thank you, Stephen. This now brings us to the formal part of the meeting. Last annual general meeting for the combined Abacus Group was held on 20 November 2024. The minutes of that meeting were approved by the board and signed by the chair of that meeting in accordance with the provisions of Section 251A of the Corporations Act. Minutes are available for inspection at the registered office of the companies, should any member wish to view them. Notice of meeting was made available with personalised proxy forms to all registered members on or about 18 October 2024. The notice of meeting is taken as read. Voting on all resolutions will be conducted by poll, and for that purpose, I declare the poll open. For the purposes of the poll, I appoint Andy Marr of Boardroom, Abacus Group Share Registry, who has examined and prepared summaries of the proxy forms received to act as returning officer and to conduct the poll. The persons entitled to vote on this poll should have been provided with a blue voting card. If anyone believes they are entitled to vote on this poll in any capacity, do not have a blue voting card in respect thereof, please raise your hand now and a member of our share registry team will assist you. At the appropriate time, I will ask that you mark your vote for the relevant resolution on the blue voting card. After all resolutions have been read and voted upon, please place your voting card in one of the ballot boxes that will be circulating around the room. Are there any questions in relation to the poll process? Proxies have been inspected and all those validly lodged have been accepted. Proxies have been received representing approximately 720,276,884 securities, or 81% of the issued capital of Abacus Group. All undirected proxies or open votes that have nominated the chair of the meeting as their proxy will be cast in favour of each resolution in the notice of meeting and provided to the returning officer. Before we proceed to the business of the meeting, up on the screen is the results from the external proxy research report. We will now proceed with the items of business as set out in the notice of meeting. I will then open the floor for discussion and questions from security holders on each item of business. Should you wish to ask a question, please raise your blue or yellow card and a microphone will be brought to you. After each resolution has been discussed, you will be asked to vote by way of poll. The results of the meeting will be made available as soon as possible following conclusion of the meeting via Abacus Group releasing an announcement to ASIC. The first item of notified business is to consider the 2025 annual financial report and other reports. There will be no vote on this item and is a discussion item only. We have our auditors present to answer any questions relating to the conduct of the audit and the preparation and content of the independent auditor's report. Are there any questions or comments on the 2025 annual financial report? Are there any questions or comments on the management of the company?
Charlie Kingston on behalf of Secretary Shareholder. Sorry if I missed it in the prepared remarks, but can we just talk about, please, the issue, the whole ASK process, rumours that it's going to be internalised, but in the context was externalised, emerged, that didn't work. Then Kirsch did for ASK, that didn't work. Now we're thinking about internalising it, but it does seem like that would be a bit disruptive for management to run business, especially with the large shareholder. His own things and representing members of the board, but yeah, maybe if we just address, I suppose, the history of ASK, the status from Kirsch was quite saying that status quo cannot continue. So where to from here? Yeah, thoughts from maybe the independent directors that weren't part of that were dealing with that process, Kirsch representatives, etc. Just to get an understanding of where everyone stands from here, and are we all seeing eye to eye, or that would just be appreciated. Seems a bit tough issues to manage. Certainly, I would imagine a distraction for management. Our properties. So any thoughts would be very much appreciated.
Well, as you are aware, I am not a director on the ASK board, and I am very happy to ask independent chairs or CEO to please address your question.
Why don't I kick it off? And I think it's important to appreciate what it was, the key objectives that the consortium sought to deal with, and that was the availability of growth capital for the business. I think, by any measure, the growth capital for the business being available is linked obviously to the trading price. This is an ASK issue comment. And the liquidity of the stock, external management of the stock were 2 points that were made and have constantly been made. And I think, you know, the bid came and the bid went. It was at a price that was at a discount to asset backing. We got constant dialogue from ASK investors that the NTA of the stock was a relevant starting point, and the bid wasn't at that point. I think where to from here, I think the question of internalisation is not an ABG question, actually, it's an ASK question. I'm not sure I completely agree with the characterisation that it's a distraction. I think, you know, what we've been very clear with the management team and both sets of boards is that the business has continued at great pace. And I think on any measure, both the APG results at the properties as well as the ASK results have been maintained across the period. So I don't think there has been any distraction as you have called it. And it's something that we're constantly reviewing as to what is the relationship between the two businesses. It's obviously a big investment for APG. That's something that we're constantly looking at.
No, I was just saying, as the manager of ASK, says where he wants to internalise it, that they might want to internalise it, the biggest shareholder.
Charlie, I think that you'll be, you know, I just caution you to jump too much at what Bridget Carter says in the Australian.
No,
I'm not sure she's necessarily an authority on what's going on in the
hit rate. It's not, yeah, they're possible, but it's been very clear from the largest shareholder saying the status quo will not continue. So the largest shareholder has said that. So.
Sure, and as I said, I think
I'm saying that distraction. You, that's all.
Well, there's issues about liquidity. Obviously, there's issues about liquidity, and you know, as we sit here today, the liquidity has decreased because of the way the shares have been traded. So, again, that is something that we're in dialogue with the major investor and all investors about. As decisions are taken by either board, they'll be communicated to the market.
Are there any other questions? Thank you. We will move on to the resolutions. Resolution 1 is to adopt the remuneration report, which is set out on pages 15 to 47 of our 2025 annual financial report. The remuneration report explains the board's policy in relation to the nature and amount of remuneration paid to directors and executives, the link between remuneration and performance conditions. Proxies received in respect of this resolution are now being displayed on the screen. Are there any questions on this item? I now put the motion that the remuneration report be approved. Please mark your voting instructions for this resolution on your blue voting card. Resolution 2 relates to the re-election of Xingmin Xian, the director of the companies. Xingmin retires by rotation in accordance with the constitution of the companies. Being eligible, offers herself for re-election. Xingmin is an independent, non-executive director, and you can see Xingmin's bio on the screen now. The directors value the contribution of Xingmin and recommend voting in favour of the resolution. The proxies received in respect of this resolution are now being displayed on the screen. Are there any questions on this item? Now put the motion that Xingmin be elected as a director. Please mark your voting instructions for this resolution on your blue voting card. Resolution 3 relates to the re-election of Trent Alston as a director of the companies. Trent retires by rotation in accordance with the constitutions of the companies. Being eligible, offers himself for re-election. Trent is an independent, non-executive director, and you can see Trent's bio on the screen now. Directors value the contribution of Trent and recommend voting in favour of the resolution. Proxies received in respect of this resolution are now being displayed on screen. Are there any questions on this item? I now put the motion that Trent Alston be elected as a director. Please mark your voting instructions for this resolution on your blue voting card. Resolution 4 seeks security holder for the 1,280,555 performance rights under the Equity Incentive Plan to the Managing Director, Stephen Sewell, on the terms set out in the explanatory memorandum. Received in respect of this resolution are now being displayed. Are there any questions on this item? I now put the motion that 1,280,555 performance rights under the Equity Incentive Plan be granted. The Managing Director, Stephen Sewell, the term set out in the explanatory memorandum. Please mark your voting instruction for this resolution in your blue voting card. That concludes the resolutions to be voted on today. I now invite the staff of Boardroom to collect the voting cards.
Have you put your vote?
Have all persons that intend to vote submitted their cards?
Next slide.
This concludes the notified business of the meeting. I will now open the meeting for a period of general questions. Are there any questions?
But the general outlook for Abacus, I mean, we're seeing a bit of transaction activity in the office, and we're still trading at discounts to PCA, but obviously not the only one. But so from here, we don't really see our ones with, I mean, some of the more actively buildings that we require a bit more active management. If you could give us your thoughts on those, and then just more broadly, if there are any opportunities that you see that what is the discount for Abacus, or like what are the leaders going for specifically for Abacus, please, to help provide that.
Yeah, I think it is an accurate characterisation that the market is turning. I think we're seeing capital, particularly in retail asset values are increasing, and the early signs are of capital going into office, particularly at the premium end of the market, not so much in the A-grade space where we tend to operate. But there is early signs. I think what we're particularly pleased about with our exposure into Sydney is the leasing momentum. We do see good, strong leasing momentum. We don't have a lot of exposure into Melbourne, where it's a bit more challenged, and we're seeing quite good growth up in Brisbane at the properties we have there. In respect of your comment about closing the gap, I think we're very conscious, and we've been probably one of the more active selling non-core assets, and we will continue to do that. We've got some smaller scale non-core assets under deliberation to be sold, and some potentially larger scale assets under consideration to be sold. And I think, we would make a decision on any of those assets at a point in time relative to market certainty and conditions and outlook for those individual assets. We do think that, we do have obviously the stake in ASK, which we would be hopeful at some point that would be monetised. That's a very big reduction in gearing for the group. So that does sort of help us frame, what our ambition is in realising assets. And of course, at the point where we do have excess balance sheet capacity, that's where we would obviously look at what is the current trading price, is a buyback an option for us, or longer term, what would be the best use of those funds. So that's the deliberation set that we're in the middle of and constantly reviewed. I think on any measure, the operating metrics for both the office and the retail space is trending positive, and that does give us a lot of comfort. Interest rates are obviously trending down, potentially flat to down, which is good for cap rates. So it does give us some probably strong signs that we are stabilising in valuations and we won't see more dramatic devaluations. We've incurred about 30% from peak to trough today, which being able to maintain gearing in that sort of low 30%, mid 30% range, even in spite of a 30% reduction of valuation, we think is quite admirable in the current market conditions.
So sounds like we're more skewed to selling into some of the increased appetite.
I think that's fair.
Development.
We don't have
Potential.
any development capital projects. It's mainly leasing incentive, CapEx work, operating expenditure work, which all drives income growth. And we're very, very motivated on, how we can drive income growth at every property we own.
Thank you. Any other questions? Is there any other business which may be lawfully brought before to this meeting? There being no further business, I would like to thank all security holders for their attendance, and I'll now declare the Abacus Group Annual General Meeting closed. Thank you for your time and consideration. The results of the poll will be announced to the ASX once they are available.